Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. Today's video is a well-worn topic, something we spend a lot of time talking about, not only just during the day, as trades are developing, but as we draw up trade ideas, as we look forward, kind of game plan for upcoming trade ideas. I mean, options expiration is or selecting the expiration for an option trade is one of the most important aspects of trading options, if not arguably the most important. Um, and what I like to kind of boil it down to, and it's definitely oversimplifying things because there are a lot of elements that go into it, but um, just what I say and what I try to stress to people is that you really want to align your expiration, so the time frame of your option contract, with the expectations of the trade, right? And the more closely you can line up expectations and your targets, right, then the better idea of the type of time frame you're going to need, and then you'll be designing a better strategy, in my opinion. All right, and what I mean by that is you don't want to pay for too little time, and you don't normally want to pay for too much time, right? Because if you pay for too little time, then you may undercut the potential of the trade and not allow it to develop over the time frame it needs, right? And if you pay for too much time, then you're paying for a lot of time premium, and your trade may play out, but then it kind of cuts into your profit potential, right? So you really want the sweet spot of just enough time to let the trade develop, but not too much time where it starts to eat away at your profit potential, right? And a lot of that for me comes down to basically, well, A, selecting the targets, all right, and then B, after you select the targets, then you need to figure out what's a realistic case for the stock to get to those targets. So whether that's just a technical move, right? Like if I'm looking for a breakout and a run, what would be the time period of that happening, right? And then when it does start to move, what is the average trading range on a weekly basis or a monthly basis for that stock? And also catalyst, right? So some of these trades, they revolve around earnings. So knowing when those earnings are is going to obviously be significant because that's going to play into it, right? So for JP Morgan, for me, I guess there was kind of two ways to approach this, and I was looking at the banks as kind of one of those rotation trade type names, or rotation trade type sectors where after earnings, JP Morgan had been building a little bit of a bull flag above the 80 MA, the 50, the 20, etc., right? And basically what I was looking for was another push through 100, which has, as you can see, I mean, it's been kind of like a bigger area of resistance, had a few runs, never really held. The biggest run was the beginning of June, but then it came right back below, right? So when it was hanging above this moving average cluster area, I was waiting for the stock to really wake up and start to run. Now, I've talked about this in the past too. When you're entering options on a stock that's in a consolidation, you have to be careful. So the problem with consolidations is that stocks can remain in them for a long period, and when something is stuck in a consolidation, that's usually a bad development for your option trades because implied volatility contracts and you just keep losing time premium, right? So when I was looking at this, I was thinking September because this was towards the end of July. I wasn't sure that August was going to be enough because the stock was still kind of stuck in a consolidation. The way I was looking at it, it was, could take a couple weeks for this to work. And then once it does, then it could take another couple weeks. It could take a couple weeks for it to break out. And then once it does, it could take another couple weeks for the stock to really start to run, right? Just based off of what it's done historically. I mean, when it does move, it can move quickly, but it also takes maybe like a week to 2 weeks to really fulfill the potential of its rally, right? So at the time, I was thinking September expiration, right? Now, let the September call flies. We just sat and sat and sat. We didn't. It basically was going nowhere and it was chopping around. Almost stopped us out, but it didn't. And then when it started to come back up, and last week I did a video talking about potential rotation trade developing, right, with the IWM, And what you could have done if you hadn't been in the September expiration, then you could possibly revisit JP Morgan right when it starts to break through 100 just for a shorter term swing trade, right? And in that case, if you're expecting the breakout to happen imminently, then you probably don't need as much time, right? Because you're waiting for the actual breakout to take place, right? And if you wait for the actual breakout to take place and then just jump on board for the momentum push, then your expectations are for that to work quickly, right? So instead of paying 2 months for options, thinking that this thing is going to break out today or tomorrow, you could possibly look at weeklies or even like 2 weeks out, right? Because the trade, if it's going to work, it's going to happen basically imminently. And when it does break out, you're expecting a sharp move, right? So there was kind of two time frames and two ways to approach this. When it's in a consolidation, I want to make sure I have enough time, right? Because time's going to be important. You got to let the consolidation resolve, and then once it resolves, you got to let the trade develop, right? If you hadn't gotten involved when it was in a consolidation, you just waited for the breakout, then you could have looked at shorter term expiration because you are thinking, okay, this is about to go. And once it does go, I'm expecting a quick move, right? So then you could look at a week or maybe 2 weeks, right? And that is really how I would approach it. And that's how I approach a lot of these things. It's like, okay, maybe I want to get involved because I think there's potential here, but it's not really ready to go. So then I want to make sure I have enough time to let that trade develop. But then once it looks like it's about to go immediately or imminently, right? Then I'm looking at something shorter term because I don't necessarily want to pay all that extra time if I think that this could play out in 2 days or 3 days or maybe like a week, right? Because I want contracts that are lower debit, higher delta, and closer to the money, right? Versus paying all that extra time, say like September or October, when I think that this is going to happen now and I think it's going to happen quickly, all right? So this is like something that's super important when it comes to options trading. I mean, it's being in the right expiration or the right time frame to kind of align with the targets of the trade, right? So just something like I go through when I'm deciding whether I want to pay 2 week, 1 week, 2 weeks, 2 months, etc. Like for the contracts, and a lot of it comes down to like these kind of like mental games, and like I'm saying, like, okay, is it going to go now? Is it does it look okay? Maybe it'll go like 2 weeks from now, a month from now, etc. Right? So that's kind of like the thought process I go through. I figured I'd just share that. Um, so if you have any questions, maybe about how I go about these trade selecting or expiration selecting, definitely reach out. I'm happy to go into it a little bit further. All right. So if you like this video and you're looking for more information on options trading, so option swing trade ideas, please follow up with the link in the description of the video for more information on options to play. I hope you guys have a wonderful night. Stay well, and I will talk to you all tomorrow.